I think that we're somewhere in between the blurry lines of risk and trying to really, really get into recovery. I don't think we're in recovery yet. We're really trying to get into recovery because when you think about all the events that's happening in the world that's currently happening for economies like Nigeria, is a much more complex situation in terms of how people are interpreting and engaging or managing those risks.
Welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition will be focusing on Nigeria's economic expansion overview of sectoral performance. Joining me virtually for this conversation is Mr. Gospel Obele, Chief Economist, Streetnomics. Nice to have you, Gospel, after a while, and Happy New Week.
Thank you very much, Otto, for having me. It's always a very great opportunity to speak with you and to connect with the ProShare brand on impacting the economy.
Yeah, thank you very much. Let's begin with your take on the October 2025 Purchasing Managers Index, which revealed a 55.4 index points performance. Quite interesting, compared to September 2025, which was 54.0 index points. It shows that the performance is improving. But does this reflect an economy that is stabilized? And of course, from the report says expansion, are we really stabilized and expanding?
Well, the Nigerian economy has always, been resilient when it comes to the PMIs, particularly because the PMI measures at the heart of, business activities, production, supply, value chain, economics, and all of those things. And if you look at it very well, that's literally the heart of the real economy. Broadly speaking, growth may not be as high as it used to be a decade ago, but we've seen that the real engineers of economic development, rather economic growth so far right now in Nigeria has been the real sector, particularly being engineered by services to a large extent. I mean, the service sector itself holds about 55% of the GDP construct, to start with. So, and we'll have more businesses in the services sector than in the manufacturing sector. So if you juggle the dynamics of that, you realize that there's sort of like a cross value engagement across board, and that has impacted on the business landscape more broadly. The real sector, particularly the business landscape, has been very resilient, particularly when you think of inflation, geoeconomics, the value of the currency. And fair enough, pretty much recent government reforms have also supported and all of that. But again, there's a room for improvement. If only we're able to, as always, fix the structural issues that we have right now in the Nigerian economy. I believe that business activities will scale, and not just scale, but also deliver good jobs, more fulfilling jobs, and improve livelihood at scale.
Very remarkable. And industry, services, and agricultural sectors were key drivers of the performance. Is that surprising to you or expected? And I'd also like to get your views. We've seen this trend of developments around banks having some high non-performing loans. Well, on the other hand, the FMCs, the fast-moving consumer goods, are doing well in terms of performance. How does that balance looking at economy and business?
Yeah, I'm not so surprised because if you look at the GDP numbers consistently for the past 10 years, the services sector has resiliently grown. Although there's been there's been an inconstant growth with the agriculture and the industry sector, but it's been relatively spread slightly, almost equitably across board over the years. And what we're seeing is that Nigeria is one of the countries in the world where we're sort of really, really fortunate to have the balance of the three. In many economies, you have a significant service-based economy. You don't have manufacturing, you don't have agriculture, Dubai, for instance, to UK, for instance, but Nigeria, you've got agriculture because 60% of our land is arable. We're number one producer of tomato, cocoa, and many of those interesting raw materials in the world. But however, there's still a farm to market challenge, there's still a farm to table challenge. They are huge. The bridge between our agricultural prowess and our GDP growth is really value processing. And that's where the industrial component comes in. Our industries are also not functioning well. So if you think about the potential of what we could do with agriculture and industry, that could really unlock new level of growth and development. So there's prospect right there. But when you look at it from the context of development banking having high NPLs. I think for development banks, the challenge has been, introducing innovative models to financing development causes. I don't think that we have enough innovative models to financing that we deploy in Nigeria. Many of our models are still traditional. You just give out loans and expect people to pay back. I mean, to start with, the concept of development already sounds like, it's structured to facilitate the development of the economy. As a result, you might not have a lot of very smart commercials components weaved into it. You don't have a lot of very strong, rigorous approach to vetting who gets what and why. The metrics may be on how many jobs you create, but before you can create jobs, you have to be a fruitful and a thriving business. So what does it take to be a thriving business? So the model of engaging, the model of deploying finance, the model of what metrics we're measuring, the model of how development banks run in Nigeria significantly has to evolve into a much more commercial focused model, at the heart of development. So their concept of what you call social investment, blended finance, and all the like. So one reason why you have high NPLs in that context is because our models are literally very traditional, and when those monies get to businesses, many times they're unable to pay back. It also slightly shows that there is a huge gap, or there is a worsening situation when it comes to income levels, business making revenue, in as much as we've got a very optimistic economy in Nigeria, we also find out that a lot of businesses are also struggling. By the time those monies get to them, is that the exchange rate has worsened or the cost of doing business has increased. And that has been the case in the last 3 to 4 years. If you look at how the data has run, the cost of doing business in Nigeria has significantly increased. So many times those monies are not being effectively being deployed by virtue of the economics around how those resources are being deployed and spent. So I think an improvement from traditional to a much more forward-thinking model for development banks, as well as ensuring that there are ways to manage the impact of the structural issues on how those monies are deployed, used, and how returns are gained. Once we're able to juggle all of those components, I think we'll be able to make significant impact and also reduce NPLs. And that take here can be the interest rate. When you think about things from interest rate context, these are also possible reasons why people are unable to pay back loans, because many of the development banks run on loans to a large extent, not really any form of innovative financing models. And if you think about it from a loan context, people are unable to pay back those loans because supply chains are broken, revenues have been affected. Trust is a major social capital when it comes to development banking and all that. So I think until some of these issues are either addressed or managed or dealt with differently, we might not be able to see significant improvement in that regard.
You've raised the issue of the interest rate regime and need for innovative financing for MSMEs. And one thing that's been clear to me is that we need to start using those hubs that connect with MSMEs to start driving financing. And I think when we do that, we begin to see impact down to the real sector. That's one area. At least if you can start from there. How do you assess the current state of the economy? And according to the Central Bank of Nigeria, kudos to them, they are really bringing out the PMI reports back to back monthly, October PMI reports. The broad-based expansion indicates that businesses are responding positively to favorable macroeconomic conditions and robust consumer demand. There's this talk about moving from risk to recovery. Is that the case from your perspective?
I think that we're somewhere in between the blurry lines of risk and trying to really, really get into recovery. I don't think we're in recovery yet. We're really trying to get into recovery because when you think about all the events that's happening in the world that's currently happening, for economies like Nigeria, is a much more complex situation in terms of how people are interpreting and engaging or managing those risks. People are already in a particular place of risk before you can think of helping them recover. So when you think about recovering, the different sectors, the different stakeholders are recovering at a different pace. Recovery means different things to different people. In fact, if you look at the PMI and people say the macroeconomic conditions are positive, people interpret macroeconomic conditions differently. So there's also a literacy gap in terms of what people term as macroeconomic conditions. But then again, as far as there's a level, and also the Nigerians and Nigerian businesses are very optimistic about the future. As far as there's a rising demand for their products and goods and services, they consider the space, economically viable to do business. which in the real sense of things is just one out of many other metrics used to measure viability of our
Right.
economic. But to a large extent, I think that our recovery or our joint recovery should be met with a lot of structural and infrastructural reforms. I think we need to, Nigeria would need a lot of investment to unlock its journey to long-term recovery. We cannot do that without infrastructure and the right structural reforms, unfortunately. And also access to finance, supporting businesses with access to finance, and the concept of patient capital. No economy truly gets into a recovery mode that can steer growth upwards and ensuring that those growth levels lead to increase unemployment and dignified work without patient capital being invested in businesses, particularly businesses that run in sectors that have high return on social investments. So the dynamics around how we're deploying finance, how we're deploying infrastructure, how we're deploying the whole economics of recovery, goes a long way to determine well, but I don't think we're in recovery yet. I think we are still yet to get more people out of the risk band, and we are yet to properly profile what recovery could look like for different economic agents.
Yeah, very interesting. Now, let's look at the outlook for Nigerian businesses and households as we head into December 25 festivities. Everybody, including me, would like to have some good funds to enjoy the end of the year. And of course, the new year 2026 in the horizon. And of course, just like you said, this insights has noted that supply chain vulnerabilities, inflationary pressures, and of course, foreign exchange volatility are still issues that has to be addressed as potential risk to sustaining growth in the coming months and even the year. 2026 is a very critical year too, pre-election year. So, Gospel, what do we anticipate looking at the whole policy approach of the government?
Well, I mean, December will always be December. There's going to be a high take in spending. But the first thing would be for businesses to rethink their approach to ensure they are on the benefits and value addition side of the in quotes the dirty December, as people call it, and I tell you what that means for households. There has to be a lot more responsible consumption and best use of resource, because 2026 is going to be a positive year for us all, but it's going to also be a pre-election year. So there's also the context of what pre-election economics can look like for infrastructure development, for MSME development, for policy reforms. What reform goes first to be largely hinged on the lens of the pre-election economics. So there are a lot of things that businesses need to take into consideration as we go into the new year. So unfortunately, we're not in a spendthrift period, as people would easily want to assume in the bid to sort of enjoy the festivities. So but then it's a promising year. It's a promising year because a lot of more investors are interested in Africa, looking to do serious work in Africa. But how do we ensure that that confidence is not just assumed, it's actually it's actually something that exists tangibly and felt within the Nigerian economy? So I think that's a major thing that the polity, safe to say, need to pass across, need to establish across, but regardless of and unfortunately, I mean, the way I scorecard pre-election year is that just your first 6 months will be the most, or the first quarter will be the most intentional. Everything else will have to start towards political correctness. So political correctness a lot of times is at the heart of what and how economic reforms will be deployed. So these are the critical conversations, and business leaders who are really, really strategic about the new year must begin to rethink lots of these market dynamics in their investments and go to market.
So key this first quarter of 2026, very important. Because before I let you go, I want to give your word to capital gains tax. This whole talk about it. Next year, January 2026, we will begin to see the implementation of the Tax Reform Act. And already the chairman of the Senate Committee on Capital Markets, Senator Osita Izunaso, has raised concerns that the uncertainty around the CGT has even wiped off over 2 trillion naira from the equities market, which is not so good. The Minister of Finance, a stockbroker himself who has evolved over the years, assured market operators and stakeholders that they're going to consult, and of course, there will be good decision around this balanced capital gains tax as the anticipation. What's your take on this? Because policy signaling will be very critical for the market and economy.
Yeah, unfortunately, like I mentioned, it's a pre-election year, so many times policy signaling is extremely. In fact, the the pre-election year, the election year, those 2 years are always significant. They shift the order of things in the Nigerian economy a lot. And we saw what happened in 2022 leading to 2023. It was a mess on the naira and the like. So,
Mm.
so to start with, first and foremost, communications will be very, very important. And part of these communications will be genuine system-wide consultations. Genuine system-wide consultations. Unfortunately, it's not something we do so well in Nigeria, in terms of visible system-wide consultation, not just consulting the 1% of the 1% in the industry, no. Consulting the value chain, people who might be affected directly or indirectly at different scale. And now the second layer of challenge you may have is that one size fits all approach to policy as well. So realizing that a one size fits all approach will never tick the box again. So how are we taking, just not just the CGT, really everything around the tax reforms, how
Yes.
we take that component and ensuring that they're trickling down across different stakeholder part, like in this case now CGT block, and ensuring that the reforms meet the people where they are, and people are able to contribute to the larger pool, because it's all revenue mobilization by the government and all of that. So I think consultation and sincere policy communications around things would be the best way forward. But I'm also really concerned that as a pre-election year, it's going to be more about political correctness, and speaking to the circle of institutions and market that can help drive the aspirations of the incumbent government.
Very clear what you said. The need for us to really, really have proper policy communication that
Mm.
impacts the economy, and implementation, very important too.
Yeah.
But all the same, we still have a conversation around this, of course,
Looking forward.
in the pre-election year, by God's grace. Thank you very much, Mr. Gospel Obele, Chief Economist, Streetnomics, for this interesting conversation looking at Nigeria's economic expansion overview of sectoral performance. It was great having you on the program.
Thank you very much for having me, sir.
Thank you very much. To our viewers, if you want to get further insights on this conversation, visit the ProShare website displayed on the screen and follow our Web TV social media platforms to engage further. To become your way again, keep tabs with socio-economic developments around you. Ottoabasi Abasiekong, thank you for watching, and bye for now.